Hi, this is Mike Maloney, and I've got Jeff Clark with me. Jeff, how are you doing?
I'm doing great, Mike. And boy, what a time to be alive in the markets right now, huh? What do you think?
Yeah, it's been an amazing few days. This silver short squeeze that is being attempted, and the results of that, and coming right on the heels of the GameStop short squeeze. So it's very interesting. And then what is happening in the world economy at the same time? It's all totally bizarre.
It is. And that's one reason why we're so bullish on gold and silver. It's not what just happened yesterday, but what is likely to happen given the economy. Well, there's lots of things that I want to go over with you, Mike. We're going to jump right in. This first one is a very interesting article. It's actually on CNBC, and it says, "Is the silver surge short-lived? Some options traders are saying no." And I'll just read you a couple clips here real quick. Silver is crashing back to earth after having its best day in more than 12 years on Monday, as the Reddit rebellion set its sights on the commodity, as well as several miners in the SLV ETF. Well, the rally is certainly taking a rest today. Plenty of options traders used Monday as a way to position themselves for the possibility of much bigger gains in the near future. SLV saw more than 5 times the average daily call volume today meaning yesterday, Monday, on the big jump. So what do you think of that, Mike, that maybe some options traders don't see this as a one-off event, that there's going to be
Yeah.
a much bigger rise in the silver price ahead?
Well, I absolutely, everybody knows that I absolutely believe there is going to be a much, much bigger rise. These are calls, though, so these are options traders. And one of the problems with options is it's a derivative. One of the things that we're seeing is that there's the inventories that are available of physical precious metals are vanishing right now, and but you can make as many futures contracts and so on as you want. And an option, when you take an option, that's for, you can exercise that in the future, but you're actually not buying ounces when you're buying an option. You're not taking those ounces off of an exchange or out of the reach of an exchange. So it isn't, an option isn't guaranteeing higher prices. An option is just a leveraged bet. You know, it's gambling. And it does have a expiration date, and it can expire. You know, you can make a lot or you can lose a lot. And I think a lot of the Reddit, the Wall Street bets community, they're they're doing all of these trades as short-term gambles. They are bets. They're looking for 50 times their currency in just a couple of weeks or just a couple of days. And I see precious metals as a longer term play and a protection. And I do think it's something that everybody should have. But I don't buy any options myself. But it is interesting that volume is up fivefold. That is amazing.
It is amazing. And I will point out that this isn't the only article where some journalists are saying that, look, some of these option traders are buying options further out. They're not just playing this 1 or 2 day trend or 1 week trend or whatever it might be.
Yeah.
They're buying further out. So it's very interesting to me that there's a lot of, a fair amount of mainstream traders on Wall Street that think, okay, this just isn't it, that there's going to be a bigger rise coming in silver down the road. That's very interesting to me. So
Yeah, I do think if they're going to play options and futures and things like that, you want to give yourself some time. And I think it's smarter. I still don't think it's the smartest bet to buy options and so on. I think the best bets are taking delivery of physical silver, whether it's in a storage account or at home or in your IRA. When you take it away from the commodities exchanges, it exposes the fraud. And what the Wall Street bets community and Reddit have exposed here is the fraud of Wall Street. That it's, the people that run the game have the game rigged, and if the game changes to where they start to lose, they just change the game. They change the rules. We've seen the margin requirements on silver go up recently, and after that, the price of silver started to come down. So it's great that they've exposed this, and you can see this. I hope this manipulation that Wall Street is able to do of basically the entire economy between the Federal Reserve and Wall Street, the game is rigged.
Yes.
And I see the best bet against that rigging as buying physical precious metals and some cryptocurrencies.
Right. The real short squeeze will take place with physical metal, not in a paper market. Okay, well,
and we've also seen a tremendous divergence between the spot price, which is the paper contracts that you can create in unlimited quantities and sell into the market. There's been a divergence between that and the physical metal. And during these periods of time, that spread, the premium that you pay above spot, goes way up. It becomes very difficult to source the metals. And everybody's scrambling to try and find some. And when you do find some, it costs a whole lot more. But you can find unlimited quantities of the paper. And you can place these options bets, but you're not going to you're not going to see any benefit of that premium spread. If you're in place before the premiums go ballistic, you have the potential of making a profit on the change in price in silver, but also a profit on the change in the spread, the premium.
Yes, very good. In times of high demand, premiums naturally go up. It happens every single time. And so times to buy are when prices and premiums are down or at least falling. So you can click on our site under precious metals and go to silver and see what we have available right now for purchase. So, well, Mike, let me jump on to the tweet of the day. And this is from a friend, Jake Ducey. I've actually interviewed with Jake. He's a great guy. He put out this tweet yesterday, and I'd like to get your reaction real quick. Silver coins selling at $40 plus, and you won't get them for a month. $27 per ounce is not the price of physical silver. Paper price only matters for mining stocks. It's useless otherwise. Buy paper dips for mining stocks, not on rips. But for physical, you're never going to find it for $27. Try $40. So, Mike, what's your reaction to Jake's tweet?
That's exactly what I was just saying. But, it's a smart tweet when it comes to using the paper price is going to determine what the miners do, because that is basically what the miners are selling their supplies for. And a whole lot of the short position actually comes from mining supply. Miners will sell forward or sell futures contracts, and they have to deliver into those in the future, but they've got it. It can be dug up. So it's not a naked short. It's a short that has gold or silver behind it, but that gold or silver may still be underground at the moment. But the paper price does tend to cause all of the miners to go up and down. And when the paper price takes a big dip, that's the time to buy the miners. The time to buy the physical, it's best when you can buy it where the spreads are narrow and then ride this thing. And if you want the price to explode, take the silver away from the commodities exchange, and an option doesn't do that.
That's right. This is all going to happen through physical, taking delivery, taking physical off the market. That's the best and biggest way to execute any type of short squeeze. And I think, Mike, we agree that's probably going to happen anyway, like in your unaffordium and unobtainium scenario, right? At some point, the metal's just not going to be available, maybe for small investors or whatever the case might be. But this is a small taste of probably what's to come. Am I right about that?
It isn't just a small taste. I mean, this is just infinitesimal compared to what's to come, because we aren't in there isn't monetary demand right now. This is a gamble, a bet that some of the people on the Wall Street bets are making. It's not the masses and the billionaires trying to protect their wealth while the stock market is crashing and the dollar is suspect. There is a crisis coming up in the future where those things are going to happen. And when they do, it's going to be monetary demand. People will be rushing back to this to protect their wealth. And then you're going to see it skyrocket, and there won't be any physical available.
Right. So I think the point of all this is, if you're an investor and you don't have as much metal as you want, try to buy on big pullbacks like this when demand is maybe a little lower and premiums are coming down. But those opportunities won't be available forever. So, well, our next, let me just jump into the next one here if I get my place, and that's viewer feedback, Mike. Let me read you this one from yesterday. This must be a proud period for you, Mike. You've genuinely educated the masses on precious metals and real money, debasement, and fiat currency extinction. I wanted to personally thank you. And that's from Gordon Malcolm. So do you have a reaction for Gordon there, Mike?
Well, thank you for the comment, Gordon. That's wonderful. When I first started this, I first went down this road in 2001. I started studying it in 2002. I started taking positions with gold at $315, the spot price, and silver at $4.30 in 2003. And when I started this, only about 1 out of every 10 or 20 people knew that the Federal Reserve was not actually part of the U.S. government, that it was a corporation that the largest banks in the world own the stock of, basically a private corporation sanctioned by the U.S. government. So we've come a long way, because now it's 9 out of 10 instead of 1 out of 10 people know that the Federal Reserve is not part of the U.S. government. So the education has been my passion and the whole reason that I got into this. I was a precious metals investor first. So from 2002, I didn't open up goldsilver.com until August of 2005. And I was researching this. I was on it every day, absolutely fascinated by monetary history. And the history always repeats, but with little twists. And the twists are determined by the fundamental setup that we're in at the time. And so you can sort of predict some of the outcomes. And I've just been trying to make people aware of that. So I want to thank Gordon for his comment. It was wonderful.
Yes. And by the way, if you've not read Mike's book, you can get it free on our website. We'll provide the link here below, but well worth reading. And he did an update a few years ago, but the big picture message from his book has not yet played out. So that's why it's still very well worth reading.
Yeah, it's actually more pertinent today than the day it was written.
Wow. Wow. So if you haven't read that, give yourself a treat. You can get it for free on our website here. So on to quote of the day, Mike. This is for Mark Twain. Whenever you find yourself on the side of the majority, it is time to pause and reflect. What do you think of that?
Yeah, when in the new book that I've been writing with you, Jeff, one of the things that I said was that that there's a difference between currency and money, and that we all use money, and we have to start using proper definitions, because you can't have a full understanding unless you're very careful with your language and you use proper definitions. One of the attributes of money is that it must be a store of value. Currencies can't. And so there's a big difference here. And I'm hoping that all of the rest of the pundits and the authors and everybody that comments on this sector, that they start using proper definitions. But one of the things that I said is that the day that the average person, the man on the street, understands the difference between currency and money is the day that the great opportunity of the great gold and silver rush of the 21st century will be over with. And so when you find yourself on the side of the majority, it is time to stop and reflect, and it's probably time to sell.
Right. And the majority clearly is not in gold and silver yet. It's been wonderful, this short squeeze movement to get the word out and get the message out. But still, most people are in the mainstream are still in the stock market and that. So not until they flood into or panic into gold and silver will we even begin to think about exiting the sector. Well, Mike, thanks for joining me on this video. If you haven't subscribed, please subscribe to our channel and hit that notification bell. That helps Mike get the message out and get his education out. So please do that for us. So Mike, thanks for joining me, and I'll see you probably tomorrow.
Okay, thank you, Jeff. This was great.